Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories in corporate filings. And remember, you're the boss of your own money here. For today, we're diving into Sight Sciences and their latest 8K filing. You know, the one that hits when something significant happens, like a company saying, oops, or let's shake things up. But this one is a bit of a mix, a strategic pivot with some executive goodbyes. Make sure you're subscribed for more insights like these and join our Discord community linked in the description to keep the conversation going. So Sciences is making some big changes. They're cutting about 20% of their global workforce, which means roughly 43 people are leaving. Why? They say it's all about cutting costs, getting more efficient, and making sure they can grow profitably in the long run. They want to focus on their main goals and stay afloat without needing more money from investors. It's a common move for companies looking to streamline and focus their efforts. Let's break down what this actually means for the company's operations. They're not just cutting people, they're also slowing down some research and development projects, focusing only on the ones that are important right now. They're also tightening the belts on spending for marketing, travel, and general administration. Basically, every dollar is being looked at carefully. It's interesting they're restructuring into segment-specific leadership, creating separate leaders for their surgical glaucoma and dry eye businesses. This suggests they think these two areas need more focused attention and dedicated leadership to push them forward. Now, the financial impact of these changes, they're expecting to take a hit of about $2.7 to $3 million in the third quarter. This cost is mainly for things like severance pay and employee benefits. On top of that, there's a non-cash charge of about 0.10 TSEC severance pay and employee benefits. On top of that, there's a non-cash charge of about 0.6 to $1 million related to stock-based compensation. So, while these are significant numbers, they're aiming to pave the way for better financial health down the road. It's worth noting that Sight Sciences is still considered an emerging growth company. This means they have some flexibility with reporting standards, but it also implies they're still in a growth phase. And these kinds of adjustments are often part of that journey. This section really lays out the why behind the workforce reduction. It's about making the company leaner and more focused, especially on achieving profitability without needing to raise more cash from external financing. This is a crucial point. Compons often struggle to manage their cash burn, and this move seems to be a direct response to that. They want to reach break-even and then profitability on their own steam. The breakdown of who is affected is also telling. About 45% of the cuts are in administrative roles, which makes sense when you're trying to cut general overhead. The rest are split between research and development, clinical functions, and sales. This means they're not just streamlining the back office, but also adjusting their go-to-market and product development efforts. The impact on their UK operations is also mentioned, with the possibility of cutting up to 4 employees there. However, the company states that if these UK changes don't happen as planned, it won't significantly alter the overall financial estimates they've provided. This suggests the UK operations, while important, aren't the primary driver of these restructuring costs. Now let's talk about the leadership changes. Matthew Link, the Chief Commercial Officer, is stepping down at the end of August. He's agreed to stay on as a consultant for a bit to help with the transition. This isn't uncommon when a key executive departs. As for Mr. Link's exit package, he'll receive 1 year of his base salary, continued health benefits for up to a year, and his unvested stock options will be accelerated. Importantly, the cost of his severance package is included within the overall restructuring costs mentioned earlier. This shows they're trying to manage all these changes under one financial umbrella. The fact that they're not planning to immediately fill the Chief Commercial Officer role also speaks volumes about their strategy. It suggests they might be consolidating responsibilities or believe the existing leadership can manage these functions for now, further leaning into cost savings and operational efficiency. Here's where things get interesting regarding their outlook. Sight Sciences is sticking by their earlier revenue forecast for 2025, expecting sales between $72 million and $76 million. They also anticipate their surgical glaucoma business to see a mid-single-digit drop in revenue for the third quarter compared to last year. This is a bit of a mixed signal, holding revenue steady while a key segment might see a dip. The good news is they're updating their adjusted operating expenses guidance. They now expect to spend between $95 million and $99 million to $105 million to $105 million to $105 million to $105 million. This is a direct result of the cost-cutting measures we just discussed, and it's a positive sign that their plan is already showing some financial benefit. The annualized savings from these workforce reductions are pegged at about $11.9 million. This is a substantial amount and clearly a major driver for this restructuring. It shows the company is serious about improving its financial efficiency. They also plan to present financial results for the third quarter and the full year in a way that excludes these one-time restructuring costs. This is standard practice, as companies often want to show their ongoing operational performance without the noise of restructuring charges. It helps investors see the underlying health of the business. Now, as with all these reports, there's a standard section on forward-looking statements. It's basically a legal disclaimer saying that while they believe their future projections are reasonable, a lot of things can happen to change those outcomes. Risks and uncertainties are always a factor, and they point to their filings with the SEC for more details. It's a reminder that the future is never guaranteed, especially in the dynamic healthcare and biotech sectors. They're basically saying that their current outlook is based on what they know now, but the market can change, regulations can shift, and unforeseen events can occur. This is a crucial part of their disclosure for legal protection. These forward-looking statements touch on the plan itself, the cost savings, the impact on their cash, and their path to break even. It's a lot of optimism wrapped in cautious language. And they wrap it up by saying they don't promise to update these statements if things change, except as required by law. It's a standard CYA cover your assets clause baked into financial reporting. And finally, the signature, it's signed by Alison Bauerlein, their Chief Financial Officer. This confirms the validity of the report and the information contained within it. So looking at Sight Sciences, they're definitely in a phase of aggressive cost management and strategic refocusing. The decision to cut 20% of their workforce and streamline operations is a clear signal that they are laser focused on achieving profitability and managing their cash flow effectively. This is a sound strategy for a company aiming for long-term sustainable growth, especially if they're feeling pressure to reach breath efficiently. Affection at Tweety organizing their commercial strategy or consolidating responsibilities which could leave them without further external funding. The departure of the Chief Commercial Officer also marks a significant leadership shift, and their decision not to backfill the role immediately suggests they might be reorganizing their commercial strategy or consolidating responsibilities, which could lead to further efficiencies. However, the fact that they're reconfirming their revenue guidance while acknowledging a dip in surgical glaucoma revenue for the third quarter is a point to watch. It means the success of their overall revenue goals will hinge on growth in their other segments. The updated operating expense guidance being significantly lower is a definite positive and shows a strong commitment to cost control. Risks here include the execution of the restructuring itself. Any significant disruption to operations or morale due to these layoffs could impact short-term performance. Also, the market's reaction to these changes and whether investors view them as a sign of strength and agility or a sign of underlying business challenges will be key. The opportunity lies in their ability to successfully pivot, focus their resources, and achieve the cost savings and operational efficiencies they've outlined. If they can navigate this period successfully, pivot, focus their resources, and achieve the cost savings and operational efficiencies they've outlined, if they can navigate this period successfully, they could emerge as a leaner, more profitable company. In conclusion, Sight Sciences is undertaking a significant overhaul to improve its financial footing. While the workforce reduction is substantial, it's a common and often necessary step. For companies looking to optimize, we'll be keeping a close eye on how these strategic shifts impact their performance in the coming quarters, particularly their ability to hit revenue targets and manage expenses. What's your take on Sight Sciences restructuring? Do you think this is the right move for their long-term success? Let us know in the comments below. If you found this breakdown valuable, please give this video a thumbs up and subscribe for more corporate deep dives. And don't forget to join our Discord community for more discussions. Thanks for watching, and we'll see you in the next Decode.